This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, March 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and be sure to get to it during the show. Overnight markets here had May corn up a half at 449. May soybeans are down 5.5 at 1165 1/4, and May Chicago wheat was down 3 1/4 at 588 1/4. No export sales announced here this morning. We are now through the spring crop insurance discovery time period here. It looks like corn is going to be 462, and soybeans looks like 1109. So now that we've got those prices, we're able to make those decisions, lock in those policies. So we've got a couple of weeks to get that wrapped up. I guess what we know here this morning, guys, certainly the big news over the weekend is the Operation Epic Fury here with Iran. Let's just jump right in. Justin, I guess it was pretty interesting waking up Saturday morning and seeing kind of a shift in geopolitics and everything that had been discussed for a while. And then now, obviously, we've seen some of the market reaction. So I guess what are your thoughts as we start the week?
Yeah, I mean, news obviously coming out pretty fast, so it's hard to keep up with everything and even harder to know what stories are real or not real on social media or, anything like that. So I guess let's just kind of try to relate it to our markets. I mean, I think kind of makes sense a little bit what we did as the first part of opening. We tried to open everything higher, and soybean oil kind of tagged along with crude oil, made new highs for the move for oil share. And then beans and meal sold off, I think, probably because of uncertainty over what, how China's going to react to, these attacks. And, do we get some more souring relations with Trump and China going into the March meeting? Yes, I guess I'm not shocked by any of the things outside of maybe that the moves were kind of overall muted. That they weren't as crazy as they used to be, I guess, like even crude oil, for example. I mean, it's up a good amount, but we used to have much bigger moves. And I don't know if that's just because global production's gotten bigger now that, a disruption like this isn't as big, or if they think it'll, actually bring more stability to the region. That's hard enough to figure that out on a big scale. But yeah, overall, nothing crazy here. I mean, stocks like Dow's making new lows for the year. So the stocks the indexes are kind of making a tough trade here. So do we see more, just money moving from one sector to another, out of equities into some other things. Gold's, going back towards the high end of the range again on this news. So yeah, I think it's just going to be volatile. And we've seen volatility been ramping up throughout this year, and I don't really see that changing in the short term.
Yeah, I see last week's commitment of traders there, Justin, 52,000 purchases of wheat there from the funds. So that was kind of interesting, that big short that you had talked about a couple of times there last week.
It's their, once every couple of years it stops making money and they have to cover a big short, and it's usually a really good marketing opportunity when they're done for the next couple of years again. So all these things, all these different relationships are kind of rebalancing. We had wheat and beans kind of at the high end of the range against corn. What surprised me to see those relationships kind of, revert a little bit back to more of a normal. But yeah, just money moving around a lot of places, and these guys have gotten, pretty big for our markets in the short run. So they move. I mean, look at how fast they moved in beans. May beans made new kind of contract highs, on massive, fund purchases. So, it is a big risk if something were to go the other way and change their mind. I mean, that's a lot of new longs in the bean complex that you got to be cautious of there too. So
Sure. Dustin, we've got crop insurance prices locked in here for the spring. Now it's going to be a mad dash to get those policies set up and written. So I guess what's on your mind here this week?
Yeah, I think crop insurance is definitely going to be top of mind here. I think, a lot of those conversations we've already had with guys, but if we haven't done it yet, I think it's still time to consider. It's actually kind of a no-brainer, I think, to buy some of these higher end policies with the bigger subsidies this year. Everyone's going to be different, but I think that overall risk will be down from the fact that a lot of people have some sort of low deductible policy. I think those will be more popular. Shifting back over to this whole situation with oil, obviously the Straits of Hormuz are closed to all but Chinese vessels. Well, almost about 40% of the oil that's going through there is destined for China. So there's still oil flowing. Their few ships are going through. And I think if you pull up the crude oil chart, Jack, the second one, this is, we had this huge spike overnight up to $75 for the April contract. We're back to $71.88. And it's somewhat muted from what I think the bets would have been going into this. And Justin made a point, like the moves are not as big as they may have been in the past. Immediately, OPEC Plus is rallying to increase production way more than expected to. So markets are doing what they're supposed to. They're calling for more production, and maybe that's what we'll get. Plus, China is still getting flow. Going back to the first chart, though, Jack, this is oil share. Dan, you kind of mentioned it beforehand. This is the percent of crush that's oil, right? 50.5% is what we're up to, the highest really in a long time. And it's uncommon to be above 50% oil share. And we've had really strong crush margins. So I think that is just part of why we've had, really good crush coming into this period. And that would be the one kind of friendly thing is we're gonna keep incentivizing crush with that type of oil price.
Very good. Ben, what's on your mind? I'm sure there's a lot here with everything going on.
Yeah, I think today's a good day to kind of not form too many convictions. I'm going to go back to what my thoughts were following first notice day. I thought that we would bounce. We made it above the 200-day moving average in corn. We're sitting right above it this morning. 53 on the profile is a really big point. We got up to 52.5 last night. And if we can get markedly above that, I think the potential for corn to get a little bit of legs there. You're not sure what the appetite is for people to get long it. Last year is an outlier year where we really didn't have any sort of a seasonal rally, trade war hanging over it. I think people knew there were going to be more corn acres, not as many as we eventually wound up with. So I think we're kind of at a crossroads here in corn. As far as soybeans go, if you were looking at the narratives flying around over the weekend and the displeasure of China with the U.S., you're probably looking at this thinking beans are pretty vulnerable. And to be only down 6 this morning, I think is kind of a win for soybeans at this point. Granted, it's overnight trade. As far as the Straits of Hormuz go, I think that only stays closed as long as we want it to stay closed. Our Navy is far and away the best in the world. And if they decide they want to open it up, they will. And if they want to try to stifle it for a while, they'll let them think they're winning. And as far as, the actual war that's going on, we've been fighting Iran in different places for years, from their strong support of terrorism, their ability to manufacture IEDs and drones and things of that nature. So I don't really think anyone should be surprised that this is happening, and how it affects the greater markets, it remains to be seen. I think there is a vulnerability from, maybe some money rotating out of equities, potentially into commodities. But I think that's going to be a day-by-day basis on what the perception is of how that is going and how long it's going to take.
Very good. We got a couple of minutes here. Ryland, last week was a pretty ugly finish for fats and feeders. Hogs, however, were able to carve out a couple dollars of weekly highs. So I guess what are your thoughts now with everything going on and to start the week?
Yeah, I mean, last week definitely was going to leave a bad taste in everybody's mouth. I mean, you had lower cash, you had a lower board, you just a little bit of looked like panic selling, but honestly, open interest has been increasing. So it feels almost like some new shorts really entering this market here. I mean, I think the JBS union strike is still kind of looming just over the market without much clarity there. And then cash prices being down anywhere between 4 to 6 lower for last week. So it feels like with the lighter slaughters that we've been seeing, 516,000 ahead for the past 2 weeks, really starting to bleed in there and suggesting that beef prices could still kind of push higher even in the midst of all this, which is what we saw on Friday. Choice was up $1.95 and Select up $3.52. So, I mean, are we going to see a big reaction just, initially from what's going on in the rest of the world, the geopolitical situation? This market has been very sensitive to stuff like this, even if it doesn't directly impact demand or the supply for that matter. So I would imagine we'll probably see a lower start just with all that kind of over the market right now. So we'll see. But yeah, it just kind of feels like I think that was the big worry coming into today, is that we just see an initial kind of liquidation or sell off from these new longs or from these new positions. So on the hog side of things, yeah, I mean, just like we talked about, it seems like the bellies are kind of leading the charge here. Bellies up $2, and overall just feels like you've had this kind of two-sided trade past several days. Just waiting to see if cash can find a little bit more support than it's been seeing. It was down 62 on Friday. So it just feels like you've seen a lot of carcass support, and that's really kind of the driving force. If it's anything like last year, similar patterns from last year, prices just kind of drift sideways for the past couple of weeks, maybe even a tinge lower. So I think the longer term expectation is still positive, but then we're just in that kind of pocket where it's just demand isn't just rocking and rolling right now. So would like to see cash prices just kind of stay here to kind of firm things up. But overall, I think carcass is really where the focus is going to be the next several weeks.
Very good. Appreciate the update there, Rye. Couple of things I want to point out here. We are actively enrolling. You're going to notice a couple of links there in the comment section for the AgYield NextGen Foundation National Scholarship Competition. Enrollments are open now through March 27th. This is a fantastic opportunity for folks that are enrolled in ag-based majors across the country. Going to be giving away some significant scholarships to the participants within that game. So check it out. Click on the link. You can go in and learn more, but it's going to be an awesome deal there. Also, if you're looking for a deeper dive into these markets, with things that we talk about on a daily basis, a deeper analysis there, check out the War Room Report. Also, those links are in the description as well. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.